So we are going to explore one of the fascinating stories of KRBL, a company that went from being a small rice trader to becoming the global leader in the basmati rice. Now you need to understand KRBL is not just a market leader in India. KRBL is the global leader. It is the biggest company when it comes to basmati rice globally. So, from the farms of Punjab to homes across the world, so KRBL has built a powerful brand when it come known for its quality and trust as well. So, this is what we are going to cover today. First, we'll start with its history and journey. Then we'll get into the business model, brands, what are their product segments, what are the growth drivers, risk, and of course, eventually we'll get into the valuation part. So you will get to know whether KRBL is undervalued or not. So that also I'll cover. Coming to the history part, founded in 1889 in Yalpur, 1889. That is 130, more than 130 years back. So what KRBL built is a legacy business. So their forefathers. So it's a generational business for them. Started like 130 years back, and they started as a modest trading business. So they were not branded players, or they were not into processing and all. They were just trading. They were just into trading business. 1990. Now you need to understand 1889 to 1990. That is 101 years. After 100 years, it transitioned into rice processing, focusing on basmati rice. So for the first 100 years of their journey, they were only a modest traders. But in 1990, they transitioned into rice processing, focusing on basmati rice. 1995, they got listed, and KRBL, once they got listed, KRBL expanded their processing units across Punjab, Haryana, UP, Delhi, and Gujarat. And today, its flagship brand, India Gate, is now world's number one basmati brand. World's number one, not India's number one. India Gate basmati rice is global brand when it comes to, and number one brand when it comes to basmati rice. Sold in 90 plus countries with massive market share, obviously in India, the Middle East. When it comes to Middle East, it is Saudi Arabia and UAE, and of course they have got a good market in Europe as well. So now let's look at their business model, like how KRBL makes money. Their core business is basmati rice. 95% of revenues comes from basmati rice. And within that basmati rice, they have many brands. Within basmati rice, they have many brands, but India Gate is the flagship premium brand for them. Other brands include Doon, Noorjahan, Unity, Jabrin, and all. They have many brands, but India Gate is their flagship brand. Offer rise in, now this is also very important. Once we get into valuation and all, this will be helpful. They offer this rice in two ways. One is the consumer pack, branded consumer packs, and they also serve bulk packs for hotels, caterers, and international buyers. So they are branded players, and they have unbranded this bulk packs that they are selling to hotels and all. That is unbranded items. So they offer both consumer packs, branded, unbranded also. Mostly for B2B, that is hotels, restaurants, and all. Second segment is non-basmati rice, which is mostly regional product. They offer Sona Masuri, Jeera, so on and so forth. But that contribution to revenue is only 200 crores. Now, to put it into perspective, KRBL revenue is 5,500 crores. Out of that 5,500 crores, this Sona Masuri, Jeera, and all, that is just 200 crores, which is less than 0.5%. So very small business. So not much of a contribution, less than 1% or 0.5%. Next segment is, of course, they are venturing into some new products as well. For example, they have already launched biryani masala products, Hyderabadi, Lucknow, Kolkata, and all. So this is biryani masala, Again, upcoming segment. Health segments include brown rice, quinoa, flax seeds, chia seeds. Now, this is mostly for health segments. So, as you can see, brown rice, quinoa, and all. So, adoption is happening in India. So, health conscious segment market. Of course, this is also a small market for them as of now. But that adoption for brown rice, quinoa, and all is growing. So, this I would say their growth opportunity in the future. As of now, 95% is 95% is anyway basmati rice, but maybe going forward, let's say in 5 to 10 years, brown rice, quinoa and all might become, let's say, 5% or maybe 10% of their revenues. We never know because this is an upcoming segment. Last is renewable energy. It can be wind, solar, biomass and all, but I think most of this renewable energy is consumed internally. Of course, they mentioned that excess or surplus energy is used for revenue generation also, but again, all the other segments not even contributing 5% of their overall revenue. So of course they are using rice husk for the power. I think most of that might be utilized internally, which will help them in the cost. So this would help them in terms of optimizing the cost, but this is again a small part of their business. I would say basmati is like 95%, which is their core business, 95% of revenue. And going forward, brown rice, quinoa, flax seeds and all, sona masuri and all, this might help them in terms of growth. Now coming to their brands and reach, like I already said, India Gate is their major premium brand, premium consumer brand. 58% contribution is from this brand. Like I said, there are many brands: Unity, Doom, Noor Jahan. There are many other brands. Out of all the branded products that they have, 58% is contributed by only this one brand, that is India Gate. Present in 750 plus cities, close to 4 lakh retail outlets, 850 distributors. That is their distribution network, which is also one of the biggest. Not just in India, globally also that is the biggest. Strong in general trade, modern trade, and e-commerce as well. So, like I already said, they are the market leaders. And if you look at each segment, for example, okay, what is general trade, modern trade, and e-commerce? I hope most of you know what is e-commerce. That is online. Let's say Amazon, Flipkart, so on and so forth comes under e-commerce. So that is online segment. What is general trade? General trade is basically unorganized, retail outlets. For example, Kirana shop. It's an unorganized, retail player, right? Small shops, mostly small shops, unorganized market, small general stores or Kirana stores comes under general trade. In that segment, they have got 38% market share. So they are the leaders over that in that segment. What is modern trade? Modern trade is mostly organized players. Organized, for example, DMart. It's an organized, player, right? Uh, Walmart. Let's say Spencer's, Geomart. These are all, organized, big players in the market. That comes under modern trade. E-commerce, like I said, online. So in general trade, they have got 38% market share. Modern trade, they are the leaders with 42% share. E-commerce also, they are the market leaders with 43% share. Exports to 90 plus countries, but out of these 90 countries, they make more than 50% of revenues within the Middle East. When it comes to Middle East, it is Saudi Arabia, Dubai, UAE and all. There they have like 55% of their share is coming only from Middle East. Maybe 10-15% from Europe. I think 18% is from Europe. USA maybe 10-12%. Africa is like less than 10 or close to 10. Now I need to mention this. In India, they generate out of whatever 5,500 crores of revenue that they are generating, 70 to 73% they are generating in the domestic market itself. That is, Indian market is contributing 70 to 73%. 27-28% is export market. Got it? 27-28. In that 27% export market, which is coming globally, 55% is from Middle East. 10-12% is from USA, 15 something from Europe, remaining is from Africa. So that's how they are generating the revenue. 75 India. So first is premiumization. So Indian consumers are moving from unbranded to branded rice. Now this premiumization is happening throughout all the segments. So generally, like growing economy or growing income levels, discretionary income is also growing. So generally Indian consumers are moving from unbranded to branded products, and that adoption you can see in the rice market also. So Indian consumers will anyway eventually move towards branded basmati rice or branded rice. So that is one way of growth going forward. Next is global demand for basmati rice is also growing, especially health conscious markets. And of course, to cater that health conscious market, they are launching these new products to enter the adjacent FMCG categories. For example, sona masuri, chia seeds, brown rice, quinoa, and all. They are the adjacent categories, right? So and that also comes under health conscious market. Then low cost high efficiency model, so integrated supply chain, in-house processing, tech enabled paddy procurement and all. So they are vertically integrated, backward forward integration they have done. So as you can see, that is helping them in the cost also. Strong brand recall, like I already said, India Gate is a household name. India Gate is market leader in India. So they have brand which is helping them in terms of high margins. They have some cost advantages, for example, economies of scale and all. They have got that size advantage, which would help them in terms of low cost also. Of course, with growth comes risk as well. There are some challenges also. Now, this challenges slide is also very important because in the valuation we are going to discuss this as well. First is export dependency. So Saudi Arabia, I said like they are generating 25% of their revenues globally. In that 25%, more than 50% comes from UAE, Saudi Arabia, and Middle East. I would say out of the total revenue, the Saudi Arabia revenue is more than 10%, 10-12% and all. What happened is Saudi Arabia distributor dispute impacted the past growth. So they had some dispute with this Middle East, especially Saudi Arabia distributor. They have a distributor over there and they got into some dispute. Now, what KRBL is doing is they are now setting up its own office over there to reduce. So, export dependency is a risk. So, to mitigate that risk, what they are doing is they are setting up their own office in the Saudi Arabia market because Saudi Arabia is contributing them more than 10%. So that is one challenge or a risk. Raw material volatility. Basmati rice. End of the day, rice is procured, paddy is procured from farmers. So anything related with farmer will be cyclical. Monsoon, prices, supply, demand, everything will be cyclical. Any business that is related with farmer, please understand, it will be cyclical because that prices keeps on changing based on the supply, demand, price, availability of monsoon, water. So many things are involved when it comes to agriculture related products. So raw material volatility is the biggest risk. Paddy prices fluctuate, impacting the margins. Remember this. Paddy prices fluctuate, impacting the margins. Next is policy related risk also. Government regulation on rice exports can affect the performance. So this happened in the past, but not with basmati rice. Normal rice was banned from exporting. I think now the ban is lifted by the government, but this ban on exporting rice keeps on happening. But basmati it comes under a special segment. So government in the past never banned basmati rice, which doesn't give us any guarantee that in future they won't do it. But as of now, looking at the past, basmati rice was never banned from exporting. A normal rice was banned. Or what happens is instead of ban, what they can do is they can increase the tariffs on exports. So that tariff is also a policy risk. Ban from the government is also a policy risk, but so far that never happened with basmati rice, and KRBL is generating 95% of revenues from basmati rice. So policy risk is there, but I don't think it will affect the company's revenue because they are into basmati rice. Next is working capital heavy. Inventory aging and procurement cycles lead to higher cash lockup. Now, this you need to understand. Of course, when it comes to inventory aging, once they collect that paddy, they keep that inventory for 12 to 24 months, because quality, once that inventory is aged for more than 12 months, the quality is good. So higher the age, higher the quality. So what the companies would do is, like KRBL would do, is they procure the paddy from the farmer and they keep it for aging for more than 1 year, because the quality will go up, the prices and all will also be very good once that aging process is done. Of course, for more than 1 year or up to 2 years, if that paddy is put for aging, then of course cash is tied up. So that is the reason there is some cash flow related issues you will find in Chamanlal Setia, and even in KRBL also you will find it. But capital intensive, because they have to do that. So that is the risk. Constantly the consistent improvement you can see, but in between you can clearly find some cycles. For example, 3300 to 3100, that's a drop. 4500 to around 4000, again that is COVID and lockdown also is there, but as you can see there is some drop. So you can see, you can expect some drops here and there, but the drop is not very big. Like I said, paddy prices and all will affect, but you can see clear fluctuations in terms of margins. Margins are all over the place because it's an agro related product end of the day. So margins fluctuate. So as you can see, from 14% to 17, 17 to 13, 13 to 24, 24 to 19, 19 to 21, 21 to 16, 16 to 18, 18 to 11. Now, as of now, KRBL is generating an operating margin of 11%, which is the lowest in the last 10 years of history. Lowest in the last 10 years of history. But revenues were not affected at all. Revenue, you can see revenues were consistently growing 4,000, 4,200, 5,300, close to 5,500. So revenues are intact. So customers are purchasing the product. Customers are buying India Gate basmati rice and they are cooking biryanis and all. So customer is buying, but the margins have dropped. For that reason, you can see from 700 crores revenues dropped, net profits dropped to around 440. This is trailing numbers, by the way, last 12 months or last 4 quarters. You can see we are at the bottom of the cycle. It is very clear. But why? Why the margins have dropped? We need to ask the simple question: is it structural or is it cyclical? If it is cyclical, then this is one of the best opportunities, right? To invest in global leader, global market leader, FMCG segment. Basmati rice comes under FMCG. So, global leader in basmati rice, a global leader FMCG company. But if it is a structural reason, then we need to avoid. So, let's try to understand whether it is cyclical or structural. So, what are the key reasons? There are multiple reasons for the drop in the margins. First is higher raw material cost. So, materials cost as a percentage of revenues increased from close to 70 to 73% in 2000, March 2024. But if you look at the trailing, this thing, the cost has gone up significantly. Why? Why the input cost has gone up? Because of the paddy prices. Like I said, paddy prices have gone up. But again, that is also cyclical. Paddy prices go up, paddy prices comes down. Very natural. Where the supply is high, demand is low, prices drop. When the demand is high, supply is low, prices increase. So paddy prices went up recently, which will eventually fall because that's a cyclical event. Paddy prices saw volatility causing the margin pressure. That is the first reason. Paddy prices. Reduced export revenue. Export sales significantly dropped. You need to focus here. This is very important point. Export sales significantly dropped from 1931 to 1300. That is 600 crores of drop in revenues in top line. Now I want to look at this picture once again. Export revenues dropped by more than 600 crores. You see, not affected the overall revenues. You don't see any change from 2023 to 2024. Here you can see there was 600 crores of drop in export sales, but still the company managed with the domestic sales. So their domestic sales were strong to cover that, what they have lost in the global market. But why the export sales have gone down? Due to temporary issues in the key export markets like distribution challenges in Saudi Arabia, which I have already covered. To mitigate this risk, they are setting up their own office in Saudi Arabia. Yes, this was an issue and it did affect the top line. Almost 600 crores was affected. But the good news is they are setting up their own office, so this will be covered. This cover up you will see in the next year. This is a very temporary issue. So you can expect more 600 coming from here, or maybe 1000 coming from 1000 more crores coming from export market. So that will add the top line and that will get the growth rate higher. Third reason for drop in the margins: pricing pressure and inventory management. So higher inventory levels, slower movement in the working capital, inventory turnover slowdown, increasing holding cost. Like I said, aging and all, they have to keep that for 12 to 24 months. So that is holding cost. That also, working capital management also impacted the profitability. But you need to understand, they had this inventory management issue because of the first reason. The paddy prices were fluctuating, export revenues were fluctuating because of that Saudi Arabia distributor dispute. So because of that, the inventory is also suffering. Inventory has to stay because 600 crores of export market that has gone down. Now if the 1 and 2 gets back on track, the 3 will automatically get into track. So this is an effect. So this is a result, not effect. These are the effects. You take care of the effect, the result will take care of its own. Fourth reason is, of course, logistic cost. So freight cost increased due to export volume and higher shipping rates, not export volume. Export volume is actually lower, but higher shipping rates impacting the margins. But again, I think they are not exporting in scale, because previously they did 1900 some crores of exports. This year they did only 1300 crores. So 600 crores of that scale is gone, because logistic works. If you understand logistic, the more the scale, the better it is. For example, if I am sending in let's say a truck, I can send 1 ton of rice. If I am sending 500 quintals also, I need to fill the same petrol, same driver charge, same truck cost. So fixed cost is higher when it comes to logistic. So because the revenues, the volume has gone down, the freight cost, obviously per ton, you have, if you consider that, the freight cost or the logistic cost will go up. But once the scale comes back, which might happen in the later years, as they are already setting up their export office also, Saudi Arabian office, I think the logistic cost will come down. This is also temporary for me. Next is product mix. There were changes in the product mix. So regional rice segment optimization led to initial margin fluctuation. Temporary softness in bulk pack basmati realized affected profitability despite stable consumer pricing. Now you need to understand, in the beginning itself I mentioned they are selling rice, basmati rice, in two ways. One is small consumer packs, which is branded items. Noor Jahan, India Gate, branded items. The other is big packs, bulk packs we call it, unbranded. Bulk packs, they are sending it to hotels, restaurants, so on and so forth. That is B2B business. And when I try to dig deeper, 55%, close to 55% is their branded rice business. Almost 40-45% of their business comes from bulk, rice deliveries, bulk pack deliveries. Now, what happened? The paddy prices went up, which affected the price realization of the. See, when it comes to B2B, they cannot pass on the entire increase in the paddy price. In the branded segment, they have done that. India Gate, Noorjahan and all, the paddy prices went up. Whatever the increase in the price, they just passed it to the customer. They raised the prices over there. So as you can see, there was stable consumer profitability was stable when it comes to branded items. But this is a bulk item, unbranded. So obviously, end consumer is also a business. So they will definitely want more, discounts and all. So passing on that price increase of paddy not happened with the B2B segment. So that is the reason overall the margins affected. So there are 5 reasons. First, paddy price increase is actually the main reason. On the top of that, exports have also gone down because of some dispute. Because of all these things, the working capital also increased. Then, of course, lack of scale affected their logistic cost, and paddy affected their bulk sales also. But if you closely observe, once that paddy related issue is solved, more or less everything will be solved. So now you tell me whether it is cyclical or structural. So primarily I would say it is cyclical. So the decline in the margins mainly driven by one, higher paddy prices, temporary export market disruption. It is temporary disruption, and of course freight cost. Now these factors are cyclical and should improve as the raw material prices stabilize and export conditions normalize. So that is the cyclical aspect. There is a partially structural aspect also, that is higher working capital intensity due to inventory management. So aging is required for the basmati rice. 12 to 24 months aging is required. That 12 to 24 months aging is structural for basmati rice. Because if you don't age the rice, then the quality is affected. If the quality is affected, the price, not just quality, it is smell, aroma and all. Everything is affected because of the aging. Aging is mandatory. 12 months, 16 months, 18 months, 24 months of aging is required. If you want to sell high quality, great aroma basmati rice. So that is a structural reason. So working capital will have effect. That will affect not just KRBL, but every basmati rice manufacturer or processing or branded player will be affected. It's not just KRBL issue. It's a structural thing throughout the industry. And of course, when the paddy prices go up, when the export demand is lacking, definitely this effect will also you'll find in the overall margins. But no one can do anything about this partial effect. If this is in place, this will be automatically in place. If this goes south, then this will also start affecting the company. So I would say it is mostly cyclical, primarily cyclical reason. So what is the final conclusion? So recent margin declines for KRBL is predominantly cyclical due to the temporary market conditions and raw material cost. So you need to understand, raw material cost. Paddy is the raw material. So paddy prices have gone up. That paddy is again a cyclical product. Paddy prices keeps going down, keeps coming up. Right now they are at the peak. So since paddy prices are at the peak, this company's margins are at the bottom. So structural issues like inventory management remain. That will remain forever. Throughout the industry, it will remain the same. But KRBL's strong brand and operational efficiency will position it to recover as the cyclical pressures ease. When will they ease? When the paddy prices comes down or cools down, automatically you will see an a great effect on the margins going up. You will see that in the next cycle. Right now, they are at the bottom of the cycle. Once that reverts back, you will see all the negatives turning into positives. So now, based on that, this is where we will try to value it. So coming to the revenue growth, first of all, KRBL has got some next generation products. For example, quinoa, brown rice, chia seeds, so on and so forth. But in next 5 to 10 years, its contribution, the new venture contribution to the overall revenue is not going to be massive like 30-40%. Even after 5 years, KRBL will be predominantly a basmati rice player. Maybe 5% or 10% here and there, new products might contribute. But even after 5 years or even after 10 years, to me, KRBL will be a branded basmati rice player predominantly. And based on that only, I am going to value. Now, if you look at the overall growth rate for KRBL, last 10 years 6.2, 7 years is 8, 5 years is 5. Last 3 years, we can see some higher growth rate. But if I look at the average, this thing, it is somewhere close to 6 or 7. But I want to be conservative here. Now, I don't want the next 10 years assumption should be more than 6%. I don't want that to happen. So as you can see, my first assumption for revenue growth is 5%. In that 5%, first 5 years, it will grow at 5%, but eventually it will grow towards the terminal growth rate. So my assumption of terminal growth rate is 4%. So if you look at the overall 10-year CAGR, I am only assuming 4.7% growth. Not a high growth, not an extremely high growth, but an achievable conservative number. Less than the last 10 years CAGR. That is my first assumption. And if you look at the current margins, current operating margins, you can see here 9.74 is the current operating margins. But look at the history. In the last 10 years or 11 years, this is the first time their operating margins have gone down below 10%. So once in a last 10 year, once in a decadal opportunity, if you believe in KRBL basmati rice as a product, I believe in basmati rice because I think even 50 years from now, people will still like eating chicken biryani or mutton biryani. And if you want to make any biryani, basmati rice is what you need. So I think 50 years from now, even 100 years from now, people will still eat basmati rice. So this business, I have a lot of confidence. So these margins are not going to stay forever. If you look at the 10-year average, it is close to 16-17%. And just 2-3 years back, also this company was generating close to 19%. So here comes my first assumption. So as of now, the EBIT margins are close to 10. But I personally believe those margins will grow, will improve. Like I said, logistic cost or paddy prices or export, disruption. These are all temporary cyclical things for me. I think those margins will revert back towards the long term average. I'm not saying it will go to 20, 25. It may go to 25 also. But I am trying to value for the next 10 years, so I have to keep it around the long term average. So I gave it 16.5, which is close to long term average, because the long term average is 16.62. So I am expecting close to long term average, which is 16.5. 25% tax rate is anyway like marginal tax rate in India. My last most important assumption is sales to capital ratio. For every 1 rupee of capital, how much sales the company would generate. If you look at the current year it is generating 1.36. But again, I want to be conservative. If I keep it as 1.36, the value will be slightly higher. But I'm looking at the long term average. The long term average sales to capital is close to 1.1. And that's what I have inputted over there. So based on my assumptions, of course, the cost of capital is slightly lower. You need to understand 73% is coming from India. but 27% is coming from the global market, which is UAE, Saudi Arabia, Middle East, that is Europe, US, and close to 10% from Africa. Except for Africa, if you take uh, Middle East, Europe, US, these are all better markets than India. So these are low risky markets. India is slightly higher risky. Africa is even higher than India. So 25% of revenues is coming from more safer markets, more matured markets. So obviously the cost of capital would go down because the risk premiums in those markets are less than India. India typical we take 12%, right? 11-12%. If 100% of revenue is coming from US, then the risk is not higher. So we don't go for 12% cost of capital, we'll reduce it because US is a more mature market. So considering that revenue mix, global and domestic, close to 10% will be our cost of capital. So as you can see, based on, and 1370 is what they have as cash right now on the balance sheet. So that is close to 15%, 12 to 15% of their value is only coming from cash. So they have got good cash on the balance sheet also. So based on these assumptions, my value per share is 370 rupees.